Every single trader asks the same question. Where is the day's high or low going to form? Well, what if you could project those exact levels with a really high degree of precision before they even happen? Today, we are going to unpack a powerful technique from ICT that is designed to do exactly that.
Welcome to AI Explains ICT. In this video, we are digging deep into the core content from Month 8, Episode 4. And look, this isn't just some vague theory. It's a very practical framework with super specific rules. I would seriously recommend grabbing a notebook, because the little details here, that's what makes the whole thing work.
So here's our roadmap. We're going to start with the big idea of projecting the day's extremes. Then we'll get into the absolute foundation of this whole thing, the central bank dealer's range. From there, we'll see how to measure the market's first move and use that as a projection tool. And most importantly, seriously, this is key. We'll talk about why market context always beats pure mechanics. And then we'll wrap it all up with a clear set of rules you can actually apply.
Now, I'm sure a lot of you are familiar with using standard deviations to kind of guess how far price might stretch. And yeah, they're useful, for sure. But this technique we're talking about today, it takes things to a whole new level. We're aiming for a much more precise forecast of where the day's ultimate high or low is going to print.
So let's be really clear about what we're trying to do here. We are not looking for a general area or some wide zone. The whole point of this method is to pinpoint a specific price level, a target that price is very likely to be drawn to for that day's high or low.
So how do we actually do it? Well, the entire model is built on one core concept, the central bank dealer's range, or what we'll call the CBDR for short. Understanding this range is absolutely everything, so let's break down exactly what it is.
So what is this thing? Well, the CBDR is simply the price range, the high to the low, that forms during a very specific 6-hour window. That's between 2 p.m. and 8 p.m. New York local time. This time period usually represents that quiet consolidation after the main trading sessions have wound down. Okay, now here's a super important point. This does not work every single day. There are strict, non-negotiable rules. This method is only valid if that CBDR is less than 40 pips wide. Ideally, you want to see a really tight little box, somewhere between 20 and 30 pips. If that range is any wider than 40 pips, the model's off for the day. You just have to sit on your hands and not use the technique. It's that simple.
This chart shows the idea perfectly. I want you to think of the central bank dealer's range as a compressed spring or like a neutral starting line. The market is just coiling up, building energy in that little box. And then, during the London and New York sessions, it just explodes away from that range. On a day you expect price to sell off, it'll usually pop up first to create the high, and on a buy day, it'll dip down to create the low before it really takes off.
Okay, so we've got our baseline range. The next piece of the puzzle is to measure that initial move out of the range. And this is almost always a fake-out move, right? It's designed to run stops, trap traders on the wrong side of the market, what ICT calls the Judas swing.
And here is the secret sauce. We don't just measure the swing itself. No, we measure the entire range of that false move, starting from the opposite side of the CBDR all the way to the very peak of that Judas swing. This total distance, that becomes our precise unit of measurement for the next step.
And this is where it gets really cool. That measurement we just took, it's not just some random number. It actually becomes our multiplier, a unit of measurement that we can project in the real direction of the day to forecast exactly where price is headed. So let's frame the exact question this technique is built to answer. Imagine it's a sell day. You've seen the market rally up in the London session, and you think, okay, that's probably the high of the day. The big question is, just how low is it going to go from here? This method is designed to give us a very specific answer. The process itself is actually pretty simple when you break it down. First, you measure the total range of that initial fake-out move. Second, you take that exact same measurement and you project it from the other side of the CBDR. And finally, you can actually stack these projections on top of each other to find potential price targets.
All right, let's walk through this with a real chart example so it makes sense. You can see the CBDR marked out in that little box. Then the market has its initial rally up, going against the expected sell-off for the day. And look, it travels 2 standard deviations above the range. This upward move, which sets the high of the day, that's our Judas swing.
So now we measure that entire move from the very bottom of the CBDR all the way to that peak high. Then we take that exact same distance and project it downwards, starting from the low of the CBDR. It's kind of like a slingshot, right? The market was pulled back 2 units, and now we're projecting that stored energy forward in the other direction. And we don't have to stop at just one projection. If the trend has a lot of momentum, we can actually stack a second projection right below the first one. And notice how this points to a much deeper price objective for the day. It gives us a potential secondary target if price just keeps on running.
Okay, now I need you to lean in for this part because this is without a doubt the most important part of this whole video. This is not some magic mechanical system that you can just blindly apply every single day. These projections are just a tool, and they only work when they fit inside a larger, higher time frame story. Context is king, always.
You see, the whole point of these projections isn't to just invent targets out of thin air. They become incredibly powerful when a projection level lines up perfectly with a significant area you've already marked out on a higher time frame, like a key daily order block or a big pool of liquidity.
And this right here illustrates that point perfectly. On the left chart, you've got our intraday setup with the projections pointing lower. But you have to ask, why would price stop there? Well, you look at the daily chart on the right and bingo. That very same price level our projection was aiming for is a daily bullish order block. The intraday projection is just the delivery mechanism that brings price to that higher time frame point of interest.
And this quote from ICT just says it all. It's the PD arrays that call the shot. Those big institutional levels are the real drivers here. Just think of these projections as the roadmap price is following to get to those key destinations. It creates this beautiful overlap of time and price.
So to wrap this all up and make it as practical as possible for you, let's boil everything down into a simple checklist. These are the key conditions you have to see for this to be a high probability model worth your time.
So here it is, your simple go, no-go checklist. First, check the CBDR size. Is it under 40 pips? Green light. If it's over, that's a red light. The model's off for the day. Second, what's your directional bias? Do you have a clear idea from the higher time frames where the market wants to go? If so, green light. But if the market's just messy and choppy, that's a red light. And finally, does your projection actually point to a key PD array? When it does, that's your A+ setup. If it's just pointing to empty space on the chart, that's a red light.
And that really just leaves us with one final question for you to think about. After seeing how this framework combines a really specific measurement with a higher time frame story, could this be the method that adds that extra layer of precision you've been looking for in your own daily analysis?
Hey, if you found this breakdown helpful, please do me a favor and give this video a like and be sure to subscribe to the channel for more. If you have any questions at all, just drop them in the comments below and an actual human will get back to you. Safe trading out there.